I think your forecast is S&P 500 flat to down 10% by October.
Yeah, the pivot in the market clearly is going to be mid-year. We're in June. But I actually think the dollar goes up because it's counter-cyclical. The Chinese tightening is going to have a market effect. It goes the opposite direction with the dollar. As the dollar goes up, the commodity prices, such as the CRB index or the industrial commodity index, they're going to weaken. And as that happens into the late summer and autumn, those names related to that will sell off. They're, much like the earnings in the first quarter, which were extraordinary. It was buy the rumor, sell the fact. I mean, we're still pretty close to the same price we were around the 7th of May on the S&P 500. So I don't expect much more lift for that trade. I think we're in this topping out process, and I'm in the defensives.
Esty, I want to get your thoughts on the Treasury market right now. I mean, it seems primed, or at least according to a number of Wall Street strategists right now, primed for a sell-off. How do you see it?
Well, positioning has remained short throughout, right? We've had this rally recently. Some of that could be seen as a short squeeze, but the reality is positioning is still quite short. From my perspective, I think the question is, what can really surprise the Treasury market? What can surprise us enough to get the next leg up in yields? We're not going to get, inflation clearly wasn't enough of a catalyst. Non-farm payrolls, I think at this point, our expectations are that they are going to rise and become much stronger for the coming months. I don't know if that's enough of a surprise. We have expectations on infrastructure. It is true that at some point later in the year, growth is probably going to decelerate in China for sure. In the U.S., maybe not quite into Q3, but later on. I don't know what big boost could lead to that next leg up in yields.
Hey, Barry, if you're right, is this a green light for the tech trade to start really coming back? We're looking at a 10-year at 148. You don't think Powell's going to do much of anything this week that's going to be consequential. So is that trade the place to be?
Yeah, that's a great question, Scott. The growth trade could very well bubble up. The PE ratio is already bordering on ridiculous. It could become quite sublime. The PE on the tech stocks could go higher. We calculated that on a CAPE operating basis, looking back over 100 years monthly, there have only been 3 years higher than today, and that was the very end of the 90s and the very end of the 1920s bull market. So if you build up to a peak and then burst, I think the Fed is making a terrible mistake. They probably know that. That's why Powell said froth at the end of April when referring to the market. So we could build to a bubble, but we'll keep an eye on that as a item to consider as we get into the latter third quarter of the year.
Well, the market is already kind of self-corrected in some of the most bubblicious areas, too, Barry, right? I mean, that has to be noted by the Fed, whether it's the ARK stocks, NFTs, SPACs, the most frothy, some say, parts of the market.
Yeah, and you look at the cryptocurrency. I mean, we think that because of the deceleration of global money supply, and I use global M2 translated into dollars, that has decelerated from March at over 22% year-to-year growth. Now its 6-month rate of change is down to 10%. So as you shrink liquidity, Bitcoin for 5-6 years now has been moving lockstep with global liquidity growth. So you're taking down some of the more speculative assets, and yeah, you've taken some of the froth out, but we had a correction in 1998 before that big blow-off in 99 into 2000. So,
Shepard Smith here. Thanks for watching CNBC on YouTube.